So with a director's loan account, essentially, when you loan money to the company, so that £85,000 on the previous slide we saw a couple of slides back, that's a director's loan account. It's best if you're going to loan a significant amount of money to your company to get an agreement drawn up. And then this allows you to charge interest at a rate we previously mentioned. And with this, you can withdraw it out tax-free, or even if you don't actually have the cash to pay it right now, you can increase your director's loan account. So if we were to charge £5,000 worth of interest, rather than that being paid cash to the bank, what we can actually do is we can increase the director's loan account. So now the company owes you £90,000. This will save you tax during the year and also increase the amount you can later take out completely tax-free. And then we can do this each and every year. One thing to note is that when you are paying interest, there's a form that needs to be filed. It's called a CT61. Your accountant will be able to do this for you. But we often see where a lot of people forget to file this form. And unfortunately, there is a risk that you will get a penalty if you don't do so. So I'll just blitz through that quickly. But what we've got now is plenty of time. So if I stop the screen share, let's just go through all the questions. So I had quite a few come through now. But if you've got any more questions, pop them in the comments now so we can run through those because you've got quite a bit of time left. Yeah, so will the slide deck be available after the webinar? Yeah, it certainly will be. What I can do is I can email these around to people. If that'd be great. If anyone would want to copy the slides, let me know and I'll email them over to you. Do you do? Yeah, absolutely. Yeah. So do you do the whole limited company setup? Yep. So we do this. We can do this for you. Our cost to set up a limited company for a property SPV, we charge, it's just £100 plus VAT to set up a new limited company. Cool. So we've got more. Yeah, perfect. Colin, I'll get that sent over to you. Pathos. Okay. Currently. I want to grow my portfolio. This man to both. Yes, actually, I'll read the question out. So essentially, we've got somebody here who's employed with a gross salary of around £21,000 and a small property portfolio, which is mainly buy-to-lets and HMOs. All of these are brought under their sole name. So they're transferred 50% of some of the properties to their wife's name just for the tax benefit. The wife's only income is the profit from the HMOs and nothing else. The long-term goals are to grow the portfolio in this manner until we both get around 50k to live off, as we need in rental income. Also, if we share the 50k, then Section 24 will not affect us. After we exhaust this, we will start to buy in the limited company, as we can leave the profit in the company and do not have to take any money out, making it tax beneficial. Yeah, absolutely. So that's a fantastic kind of way of doing it. This is where a lot of people kind of jump into a limited company where maybe it's not the best thing to do so. So based on your current circumstances, you've actually got £50,000 each to live off. So yeah, you both get £50,000 each. So in total, as a household, you actually get give or take £100,000 a year in rental income before Section 24 actually starts to impact you. Assuming that you leave your employment, so with no other employment income, just property income, you can get £100,000 a year without there being any significant impacts of Section 24. So if that's what you want in the long term, £100,000 a year, then you probably won't actually ever need to get a limited company involved. You could simply just keep buying in your own name until you hit that ceiling, and then kind of call it a day and just live off the rental income. If you do want to grow significantly beyond this and acquire a number of more properties, then yeah, certainly a limited company might be the best thing to do, because as you go in the higher rate band, you'll start paying tax at 40% and Section 24 will really start to kick in. Yep, so can a holding company be set up as an LLP instead of a limited company? Yes, it can, but I think off the top of my head, it doesn't have the benefit of the capital gains group relief. I think it can work for a number of other reliefs, especially the stamp duty relief. But with dividends, I don't think it also benefits from the dividend exemption. So it can in certain circumstances, but some of the benefits of having a limited company as a holding company are actually drawn back where you've got an LLP. Yeah, so for clarity, 681 buying and selling of real estate means a trading company. Yeah, exactly that. So you can either, depending on the scope of flipping you were doing, and if you're doing substantial refurb work, that SIC code 68100 would be suitable for that. Essentially, it's where you're buying and selling of real estate. If you do a light amount of refurb, that's fine, but it's a property trading company, which means that you won't be holding the property for long term. You won't be buying all the properties on mortgages. You'll be having short-term finance, whether that's bridging finance or cash purchasing, because you know you're going to sell it on, so you don't need a long-term financial product for that. So what are the tax benefits of purchasing a property in a limited company? So for me, the biggest one is it allows you to control how much tax you want to pay in some respect, in that you know for a fact that you have to pay 19% corporation tax. But if you leave the money in there, that's all you're going to pay. Whereas if you were to draw it out personally, or indeed have property in your own name, if you earn more money one year, you might get a bonus, you might have a couple more properties. All of a sudden, you're going to get pushed into the higher rate bracket. Which when you start paying tax at 40%, and then also essentially you get less tax relief on your mortgage interest. Those Section 24 really kicks in, and you only get a 20% tax credit. So for me, that's the biggest benefit, is that you can reinvest a lot more of your proceeds, especially if you've got a job that you enjoy or you've got your own business and you don't actually want property income. You don't want the money to live off now. You want it as later on down the line. You're trying to build it up in the sideline for later on. That's where I think the real benefit to having your limited company holding the property is, because you pay 19% corporation tax, you can reinvest the proceeds, and you're continually doing so each and every year. So I've got, I want to take a director's loan from my consultancy business, which is cash in the bank, to fund the startup of a new limited company. Would it be better to set up a holding company instead and move the money to the holding company and then move it down to the limited company? Yep. So yeah, so if you've already got a overdrawn director's loan account, well, if you've got a balance essentially, so as long as you don't go overdrawn with the money you're borrowing from the consultancy business, that's fine. As long as if a existing director's loan account is being repaid, that's okay. But if for instance, if it's a clean slate at the moment, you owe the company nothing, the company owes you nothing, then you would take £100,000 out of profits, retain profits from the consultancy business, to then invest into property or invest in a new limited company. That's where that 32.5% tax charge will kick in, because you would end up owing your company £100,000. So definitely try and avoid that if possible. That's not a good thing to do. One thing that is fantastic for people in this circumstances like yours, if you've got a trading company at the moment, so your consultancy business, what you can actually do is something called a share for share exchange. So yeah, pretty good, get a pen and paper just in case. It's a share for share exchange, and what it enables you to do is it enables you to insert a group, so a holding company in place. You simply you swap the shares around, and the end result is that we have a holding company at the top now, and then your consultancy business as a subsidiary underneath, which runs back to that slide where we had the good holding company, where you got your trading company, and then dividends go up to your holding company, and then you loan it back down to your property SPV, which is going to buy and hold property. So definitely look at getting one of those set up, because that's likely going to be the most tax efficient way to structure all of that, Colin. Perfect. So yeah, thanks for clarifying regarding 68100. But mortgage lender seems happy with this code for SPV long term. Yeah, they're not too fussed about that. If they know it's a freshly set up company, there's no trading history to it, they're not really impartial. They don't really care too much about SIC codes, but it's just a small little indicator to them. Some lenders are quite anal about that. They will want to see a certain SIC code. Others may not, depending on what finance product you're getting out, and how comfortable they are with the actual property and the deal itself. So that's not a massive issue. Perfect. Do you have any more questions at all, guys, before we call it a day? I'm happy to stay on for as long as possible, just to make sure everyone's got all their questions answered. Any more questions, anyone? If not, what I'll do actually is, let me share my email. I'll put my email address in the comments here. So if anybody does, I appreciate that there's a lot to digest at the moment. Do you offer one-time consultancy? Do you offer one-time consultancy? How much is the charge? Yeah, so it depends what it's for, but usually, so if we have a 1 hour consultation, which is essentially we do a quick review of your circumstances, and we can advise you over the phone. So there's no written advice for that, but that's just 197 plus VAT. So that's a telephone consultation where we answer any questions you've got. We have up to an hour on the phone, so we can really go through your circumstances. We can go through some calculations if we're able to do those quickly. That's the best one if it's just a one-off consultation. If not, we'll have to look at your circumstances, and the price depends on what it's for. So if you send me an email, then we can give you an exact price. But yeah, prices starting from 197 plus VAT for a full consultation. Perfect. Yeah, so I've got my email address there. So any questions at all, guys, just ping me over an email. I'm more than happy to help. I'll also send a copy of the slides and a recording of this webinar to everybody so that you can go through it at your own time, because I appreciate there's a lot to take in and I talk quite fast sometimes. Yeah, cool. We've got some more questions come through. What is the most appropriate SIC code for long-term investment? That's the 68209 one. Let me see if I can find that slide. It was 68209. Yeah, 68209, other letting and operating of owned or leased real estate. That's the most common SIC code, and pretty much every single lender out there is going to accept that. Bank accounts for a good bank. So yeah, I recommend Starling are pretty good. I've had accounts with them. Tides are pretty good also. Recently, I've just set accounts up with HSBC, simply because when you are looking for a more tailored service, all the online ones, they're kind of quite set in the way they work. Whereas if you want an account set up quickly and you've got holding companies in place, for instance, Starling don't accept holding companies. Tide do, but sometimes they just decline your application for no reason. So I've had to start going now to the high street banks such as HSBC or Barclays, because those guys are used to dealing with holding companies, and they don't have any issues with that. So for rentals and flips, VAT does not apply, right? Yeah, absolutely. So if you're doing anything that's residential property, really, there's no VAT. The only time that you need to consider it is if you're doing development, so ground up or conversions, there might be some VAT opportunities there. But when it comes to doing a BRR project or a flip, you're going to pay VAT on all the materials, and you don't have to charge VAT. So it's just not something to worry about. It simply doesn't apply. It's exempt. Is it a good idea to set up the holding company as LLP? I'd say not, unless there's any real. I very rarely see the benefits of having the holding company as LLP. Depending on the level of income you've got, and if you are looking to bring on quite a few different people, and there's serious wealth in the company, maybe. But usually, I think a limited company is going to give you a better result, as there are a few more reliefs that apply. Okay, yeah, Luke. So you can't see the email address. It's in the comments box. But what I'll do is, let me share the last screen actually. Can you see it there? Just share my screen again quickly, and then you'll see my email address there. Yeah, so there's my email address there, guys. So it's joshua@jsmpartners.co.uk. And yeah, I know you guys are on this webinar, so if you've got any questions at all, ping them an email and I get those answered. Usually if someone used to email is asking me a question, we put a consultation fee there. But since I know you guys are on this webinar, I'll get those answered for you at no additional cost. So joshua@jsmpartners.co.uk. I'll stop sharing my screen again now. Any more questions coming through? Can I use more than one SIC code for the company, say 6800 and 68209 together? Any drawbacks? I'd counter that and say, what are the benefits? There are no benefits to having more than one SIC code. Essentially, the only time it's used as a kind of small indicator to HMRC, as long as the lenders accept it, that's fine. It's not a worry. They're going to accept 68209, and as you say, some accept 68100. With HMRC, they're going to want to look at the actual substance of the transaction. So if we wanted to try and claim some kind of relief, gift relief, entrepreneurs relief, any of those reliefs that are only available to a trading business, they're going to want to look at the accounts. They're going to want to see the actual substance of it. So a SIC code in those cases won't make any difference. So I'd just say, keep it simple, have just the one, unless you are really looking at doing property investment and then property trading in the same company, which is a whole different issue, and you probably should look at separating them out. If not, just to make sure that you preserve some relief, such as entrepreneur, business asset disposal relief, gift relief, that apply to a trading business. Do you need to do annual accounts for a holding company? Yep, you do. But the good news is, so most accountants, I know we certainly do, we actually charge 50% of the annual fee for what we would for a normal company, for a holding company, to recognise the fact that they are incredibly simple to do the accounts for. All that there is literally just dividends from trading companies up to the holding companies. So dividends received, then money lent back down. That's usually the only transactions that go through a holding company account, but we still do need to do the full accounts and a tax return for them, just to tell HMRC that we received dividend income, but it's exempt. Perfect. So any more questions at all, guys? Thanks for clarity. Yeah, my pleasure. Yeah. Okay, perfect. So what I'm happy to do, guys, I'm happy to call it an evening. If you get any more questions at all, you've got my email address. Otherwise, I'll send the recording out and the webinar slides for this. What I could also do is, even if you don't have any questions, if you've got any feedback about tonight's presentation, please do just send it to my email address, joshua@jsmpartners.co.uk, just to say, yeah, great webinar, or not so good. I've got thick skin and I'm always open to feedback. So that's all for me, guys. Thank you very much, and I hope you enjoy the rest of your Sunday, and I catch up with you all soon. Bye, guys.